Markets have just held on to the green line after opening in the green but losing a little bit very quickly. The midcaps are a spot of bother actually today. They're just about green at this point in time, but look like at an index level they would step into the green, into the red at any point in time. Advanced decline started off with a 2:1 advantage. Now it is, a 3:2 kind of advantage. So the lines are a little bit of narrowing. Anyway, these are very, very early days, first 15 minutes of trade. So let's not make any significant takeaways from here and invite someone who can give us more longer term takeaways. Our market master for the day, Manishi Raychaudhuri, Asia Pacific Equity Strategist at BNP Paribas. Good morning, Manishi. Good to have you with us. Well, let me start with something in terms of mood. You're sitting in a very comfortable place in Hong Kong where you can see global flows more clearly than we can see in India. What is the sense you're getting? We've got a very questionable result season. Some of the PSU bank results were particularly painful. Yeah. Does India still remain the flavor of foreign investors?
I would say from a longer term perspective, still yes. Even though the point that you make, that the result season has been slightly shaky, that is being noticed, and many investors have questioned that. We've been traveling all across the world over the past few weeks, and this is actually one concern that got repeated. Historically, if you look at last maybe 4 or 5 quarters, the relatively bad results, lower than expectations, they were concentrated in certain areas. But this time around, it seems a little more widespread. The public sector banks have disappointed. Many of the engineering companies, they have disappointed. If you look at Crompton Greaves, for example, yesterday. Many of the commodities, particularly in steel and non-ferrous metals, steel more so, they have disappointed. And to cap it all, even some of the large cap consumer discretionary names, Hero MotoCorp yesterday, for example, they disappointed on the margin side. So this is actually being noticed, and investors are beginning to question that the hype about India, which was quite apparent, in the post-election season, is that sort of misplaced, or was it too early? So this is the kind of debate that goes on right now. Having said that, there's still a significant proportion of investors who argue, perhaps correctly, that over the longer term, India still remains one of the best games in town because the political and policy transition has happened. It has happened better than many other regions where it was expected to happen. Secondly, India still remains one of the biggest beneficiaries of commodity price decline. And third, the growth outlook is now better. Growth clearly bottomed out about 4 quarters ago. And, that's actually a rare occurrence in the entire emerging market universe. So, I think the longer-term bullishness is still there, which is reflected in the flows. But over the short term, I think there is some concern in the investor's mind.
Manishi, hi, good morning. That's an interesting point you make. So are investors only questioning this hype, or is there a prospect of funds being pulled out towards the due course of the year?
I think some small amount of adjustment to this massive inflows that India saw in the second half of 2014, that might happen. I would not characterize it as a large-scale fund pullout because the allocations to Asia or emerging markets themselves, they have actually declined, and in an environment of US dollar appreciation like we have seen over the past 6 months and are likely to see going forward, that has never been good news for emerging market flows. During 96 to 2002 and then again later on, whenever the US dollar appreciated on a sustained basis, we saw that emerging market flows actually flatlined. Incremental flows declined quite significantly. Therefore, from those little flows, if India has got a significant share, I would consider that quite creditable. In a nutshell, I'm not really worried about a very significant pullout of funds out of India. I think there could be some degree of profit booking, particularly in the names that have appreciated significantly. And in the next couple of months, while we enter into the budget season and particularly the budget session of the Parliament, investors would look at the legislative measures, whether they're being passed or whether they get knocked down by the upper house of the Parliament. These variables would be looked at very closely. So I think we could expect some degree of volatility in flows and in the market, but it's too premature to characterize that as a kind of a wholesale pullout.
Okay. Well, let me come to the banks, Manishi. You spoke about the pain in the public sector banks. It was the private sector banks that were shouldering the bank nifty. And then you had this ICICI Bank numbers, which again showed the same problem of NPLs. Would you now recommend a reduce on ICICI and towards Axis, or has the market already done that?
I think, to some extent, in the private sector banking universe, this problem of increased NPLs that you talk about, that has possibly got discounted into the valuations. We have seen the likes of ICICI Bank correct, over the past few days. Over the longer term, or even over the medium term of maybe next 2 to 3 quarters, we are still relatively more comfortable about the private sector banks. We think that the likelihood of a serious expansion in NPLs or serious worsening of asset quality is limited there. Our favorites would possibly still remain HDFC Bank, ICICI Bank and Axis in that order. But the problem is definitely more pronounced in the public sector banking universe. So we are really very cautious on that side.
Okay. There has been a big slowdown in consumption patterns as well, Manishi, and we see it staring at us in the form of results from HUL, from Marico, etc. How do you deal with the FMCG space now?
Yeah. Right. See, FMCG, consumer staples, is something we're slightly cautious about. In a portfolio allocation within India, we're actually recommending more of the consumer discretionaries in the form of autos. We're recommending private sector banks. We're recommending select industrials, which don't have too much leverage. And we're recommending IT services. So in case of consumer staples, as you rightly point out, there has been a phenomenon of consumption slowdown, partly because of rural incomes declining. I think the previous government's cash handout policy is likely to be curtailed, and it's already being curtailed by the present government. That, in turn, may lead to some degree of consumption slowdown or down trading for some of the consumption segments, which we're already seeing. But over the longer term, I think that's a very favorable policy. It would open the doors for channelizing the savings into investments, and it would obviously lead to some degree of investment acceleration further down the line, maybe in late 2015. That's a very good outcome, but investors would have to choose which segments of the economy they want to play very carefully.
Okay. Well, instead of me or us giving you leading sectors, let me give you a blank check kind of question, Manishi Raychaudhuri. What are your picks in the mid-cap space now?
I would think that, the sectors that we like are the ones that I mentioned, and the mid-caps names, of course, would also have to come from those sectors. So, I would not really name any, any specific stock, but if you look at the preponderance of mid-cap names, there are possibly some in IT services. There are quite a few of them in the engineering or construction space, though one have to tread very carefully there, because many of these mid-cap names have huge degree of leverage on their balance sheets. And there could be some in the consumer discretionary space also, both in the auto and auto components and otherwise. So those are the 2 or 3 sector categories that we're focusing on when it comes to mid-caps.
All right, Manishi, we will leave it at that. Thank you very much for joining us, and of course we'll touch base with you hopefully once again before the budget.